Hello, everyone. Happy Friday to you guys, and welcome to the last edition of the Forex Morning Mastery, as we will be taking another fresh new look into the financial market, as majority of participants will definitely be rounding off on their trading activities for this week, especially as we prepare for the weekend. And of course, today promises to be a very exciting edition, as we are going to be looking into some inciting and interesting situations going on in the market right now. And of course, today comes with a couple of peculiarities as to psychological expectations into the financial market today. One of them is the fact that today being the last trading day of the week, we usually see market participants do rounding off of their trading activities, and in this kind of scenario we are likely going to be seeing a situation where price action will begin to reverse from the prior leading price action. Now, the rationale behind this kind of situation is the fact that majority who had bought assets at a very cheap price at some point at the beginning of the week, and price had rose significantly well, will at some point want to start closing in some of their position, taking in some profit off the market, and this would reflect on potential reversal setup. So we are going to be taking this into consideration while we review the current market conditions. Then another thing I would like to bring to your attention is the fact that there could be some potential dynamics in today's trading session, especially after witnessing the closure of the US market yesterday due to the Thanksgiving public holiday, and the resumption of trading activity today is likely going to bring in some high level of volatility and heighten market participation. With the US market being closed yesterday, we can anticipate a surge in trading activities today as market participants return to their desk, and of course there's tendency to be accumulations of market orders resulting in larger than usual trading volumes today. So all these little things that most people don't take into consideration are what we are going to be looking at today. And of course, we do want to be on standby to capitalize on that big move when it finally happens. So once again, you're welcome on board. My name is Sheriff Daramola, and we are, for the next 30 to 40 minutes, we are going to be delving into the market structure using simple and fundamental tools such as trend lines, key levels, and of course chart patterns to unravel the potential direction of price action for today's trading session. Well, so far this week we have been monitoring three major assets, which includes the GBPUSD, the XAUUSD, and of course the USOILSPOT. We've been doing fairly well since the beginning of the week, unless for yesterday, due to the low volume in the market, we saw how price action was finding it difficult to find a sense of direction. But I'm hopeful that today we are likely going to be having a sense of direction, not only a sense of direction, but a high surge in price movement. And what we want to be doing here today is to see how we can capitalize on that next move. So I encourage you to stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. Now, for those of you who are joining us for the first time, you're highly welcome on board, and I'm so excited to have you around with us this morning. You may be asking what this is all about. Well, as technical traders, we usually gather here every day to come together as a community and engage in follow-ups and reviews of our current positions in preparation for both the London and the New York session. The session usually kickstarts officially 9:05 a.m. West African time, 8:05 a.m. UTC, and I do encourage you to stay tuned in so you don't miss out on any of the ideas we will be deliberating on today. My aim is to equip you with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with us here in this community, the better you will become at comprehending our analytical approach and utilizing the information you gather here to enhance your own trading decisions and strategies. So once again, I welcome you all on board and I encourage you to engage in the comment section, as the more you ask questions, the more you get involved here, the better you will become with time. So with that being said here, let's dive right into the business. So I can see a handful of comments right here. Hello Kelechi, good morning to you. Glad to have you around with us this morning. Raja BD, Hiker's Diary, Gashi Asafa, good morning to you guys. I'm so excited to be with you here today as we take another fresh new look at the financial market. So as usual, the first thing we are going to be doing this morning is to dive into the economic calendar. And for those of you who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, usually on the economic calendar, we focus on high impactful events from the economies that affect the assets on our watch list. And based on the asset we have been monitoring so far this week, we will be focusing on both the United States and the United Kingdom economic docket. Yesterday, we had some wonderful results from the United Kingdom economic docket as regards to the S&P global publication, which came in quite beyond all expectation. And of course, we saw how the pound sterling reacted to that one, but we are still not sure if this momentum will be sustained, and the resumption of the US market today may likely incite some sell-off. So we need to keep our fingers crossed, and we shall be looking at that one in detail. However, for today, November 24, Friday, we are looking forward to the S&P publication as well from the United States economic docket. Now, for those of us who are not familiar with what the S&P publication is all about, well, to simply put, this publication covers a wide range of topics, including market trends, credit ratings, economic indicators, and of course, industry insight. And of course, it usually provides valuable information to investors, financial professionals, and businesses, helping them to make informed trading decisions and stay abreast of market developments and of course the health of economies of whatever country the publication is happening in. Now, with that information in mind, let's look at what we are expecting for today's trading session. Now, we have two S&P publications coming up today. One is the manufacturing PMI, which of course gives us an insight into the health of the private sector companies from the manufacturing sector of the United States. And usually a reading above 50 indicates a positive and LD sector. However, if anything drops below 50, there is a chance that the dollar may likely drop to the downside as a result of that one. And this is coming in about 5 hours from now. So we look forward to see what the actual data is going to be on that one. Now, if we look at the previous data here, it came in at the exact 50 for the month of October. And as it is right now, we have economists projecting 49.8, which is a little bit lower than the previous data, which shows that there is a little bit of contraction in that regard. So let's see what the actual data will be on that one. Then that same simultaneously, we are also going to be witnessing the services PMI, and this data is derived from surveys of senior executives at private sector companies from the services sector as well. And a reading above 50 indicates the service economy is generally expanding and a bullish sign for the US dollar. And if anything below 50, then definitely we are looking at a contraction in that sector. Now, if we look at the previous data for the month of October, we saw it come in at 50.6, just a little bit beyond the expected indicator. And for this month, we can see that economists are projecting a 50.4, which is also a little bit lower than expected, though the data is still above 50. But the fact that there is a little bit of expected contraction there is a signal that we are likely going to be seeing some contraction in both the manufacturing and the services sector here. So we want to see how the market is going to anticipate and of course react to this event. And as technical traders, we do know that the anticipation of this event alone usually influence the market influx and the market sentiment, which in the long run will reflect on the chart as price action. So talking about price action, let's dive right into the business. As usual, the first asset we will be looking at this morning is going to be the USOILSPOT. And in fact, on the USOILSPOT, since the beginning of the week, we've done very, very well, as we have scooped in over 1,000 pips in profit on this particular asset, as we had both buying at the beginning of the week. We were buying this asset, and during the second and third day of the week, we were also selling. In fact, the sell momentum was so massive that we scooped in over 800 pips on that single move from 3 sell positions, making it a very phenomenal week for us all in this community. And besides that, there has been quite a lot of development behind the scenes, which are really affected this market so much. Now, during the second, I think on Wednesday before the public holiday yesterday, we had a phenomenal US stockpile which rose with over 9 million barrels for last week, which was a phenomenal figure compared to what we have been witnessing in the past. And this for us is a sign that there is an increase in supply in the market. And we know our simple economics, when there is a rise in supply in the market, definitely the tendency for price to drop hereby increases. Then not only that, we also witnessed the sudden and unexpected postponement of the OPEC Plus upcoming meeting that was supposed to be held on the 26th of November. Now it was postponed to the 30th, and in fact this also caused some imbalance in the market as majority became scared or unsettled by this development, and this led to that massive sell-off we saw 2 days ago. So those two factors here really push price to the downside. And as a result of this development, since this development happened, we have seen price fall into a range between the $76.80 level and the $75.90 area in the last 24 hours. And of course, we do know it was due to the low liquidity in the market as a result of the public holiday that was observed in the United States yesterday. Now, for us to capitalize on the next move, we shall be diving into the structure, dissecting it from a technical standpoint using our fundamental tools. But before we go into that details, and for the sake of those who missed out on our earlier sessions, I would like to take us through how the week started and what led to the decisions we made so far this week. Now, at the beginning of the week, it was very clear that price action was confined within a range that is between the $76.80 level and the $75.90 area, which emphasized the level of indecision that was going on in the market at the beginning of the week. And we also emphasized on how important that area is, as it was just exactly around the resistant line of that descending channel we spotted at the beginning of the week. So for those of you who are joining us for the first time, I will encourage you to watch my video on Monday for the USOILSPOT, where I did a top-down analysis on this asset. A quick view of that video will give you an insight into how we got to the levels you are seeing on the chart right now. The links are right in the description box below, so you can check them out after the live session. But for the sake of some clarity in this video, I'm going to be looking at the 4 hours time frame so that we can have an holistic perspective into what is going on in this market. So don't worry, we will look at that in a moment. So we saw the situation here, and in fact the breakout of the resistant line of that range was all we needed to capitalize on the first buy position for the week. And in fact we rode that momentum all the way up, added one more position at the breakout of the $77.95 area, and in fact we scooped in over 160 pips on that first move, and that 45 pips thereabout on the second move, giving us a total of 200 pips, but price dropped down and we moved our stop loss. So we should be having a minimum of 100 to 150 pips in profit on that single buy move as at the first day of the week. Then on Tuesday stroke Wednesday, we begin to see some indecisive situation going on in the market, and in fact we were thinking that price action will continue the uptrend and that the pullback we saw here will likely be a retracement of that impulsive move to the upside. And of course we did bought at the $77.50 area, remember, and I did tell us on Wednesday, after we saw that the buyers were not really gaining momentum, that we should move all stop losses to our entry point, and that if price action goes on to break down the $77.10 level, taking out all the buy positions there, we will be joining a bearish momentum to the downside. And that was exactly what happened. Gave us about 3 positions, and we rode this move all the way to the downside, scooping over 800 pips in total from these 3 entries we had on this one. So it has been a very, very phenomenal week for us all on the USOILSPOT. Now, during our live session yesterday, we did acknowledge the fact that yesterday was a public holiday in the United States, which led to the closure of the market. And I also mentioned how it's very possible that there will be low volatility that could lead to unnecessary spikes in the market, and we need to be very, very careful, waiting for significant confirmation for us to capitalize on any move. And as a result of this observation, we saw how price was confined within the $76.80 level and the $76.90 area. And I also mentioned that this same range was where price action started this week, as you will see here. So it makes this area a very, very important juncture that we need to exercise a lot of patience to wait for structures to mature before we jump into any position. And with this in mind, we said I told us all yesterday that I will be looking out for buying opportunities with a buy stop order above the $76.80 level, which was never triggered. And I did mention that the only condition that will make me sell is for us to see a significant confirmation, like a breakdown retest of the $75.90 area, where continued lower highs and lower lows on lower time frame will give us an opportunity to sell. Though we had a breakdown happen, but it wasn't a convincing breakout to incite a sell-off to the downside. Now, at this point in time, we really have been inactive in the last 24 hours as we continue to monitor price action around this range. Now, to prepare for today's trading session, I would like to show you what things are looking like on the 4 hours time frame and how likely price action is going to be respecting this technical setup, especially as we head into the weekend. That is one. Secondly, next week is the US oil, the OPEC Plus meeting. That's on the 30th. That's on Thursday. And then we also have some factors from the United States economic docket, which is looking, there has been a dichotomy amongst participants in the market as regards to whether the Fed will be increasing interest rate or the rate cut will be coming in anytime soon. So things are really very, very uncertain at this point in time. But as technical traders, we do want to understand the psychology behind the thinking process of market participants in this environment. So let's scale up into the 4 hours time frame so we can see what is really going on from an holistic perspective. Now, for those of you who are part of our live session on Monday, you will be familiar with the setup. But for those of you who are joining us for the first time, let's run through this quickly and see what is happening here. Now, on the 4 hours time frame, what we did here was to take into consideration the nature of price action in the last 3 to 4 weeks. And we were able to identify a downtrend situation, and we saw our price action transition into a descending channel. And when we connected the series of lower highs, we had the resistant line of that descending channel right here. Then we connected a series of lower lows as well, giving us the support line of that descending channel. Now we had something to work out with for this week, and one interesting thing happened at the beginning of the week as we saw our price broke out of both our key level had a $76 area and of course the resistant line of that descending channel, giving us a bullish signal to work with for the week. And of course we did take advantage of that move. Now from a technical standpoint, when price action breaks out of a structure such as this, we expect that some point in time there will be some profit-taking activities which would reflect on the chart as a retracement in an attempt to retest the structure to incite an uptrend continuation. Now, if you look at the structure closely, you will see that price appears to be falling through without expectations, as you will see that as soon as price tested the resistant line of that descending channel, we saw buy pressure resume. In fact, we saw a bullish engulfing candle spring out of that structure to give us signs that we might likely be inciting this uptrend situation as expected. Now, with the situation here, we saw that after the bullish momentum happened, price went into a range, which was also as a result of the the public holiday in the United States yesterday. Now, with the situation here, we are right in the limbo where you know how we do it. When price action falls into a range like this, we want to exercise patience and wait for a significant confirmation, which will likely come in the form of either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line maybe to give us an opportunity to sell. But if you would ask me from my own sentimental perspective, I'm of the opinion that price action is likely going to climb up, breaking out of the resistance line of that range to the upside. Now, one of the things that make me to feel that way is simply because of the nature of price action within that range, especially around our key level for the week, which is situated at the $76 level. And you know how we use our key levels in this community. As long as price action remains above the key level, we want to be looking out for patterns and structures that support the idea of buying that asset. Now, look at what happened around that key level in the last 24 to 36 hours. You will see sharp rejection around this area, sharp rejection around this area. In fact, we had an hammer candle around this area yesterday. And for me, these are signs that sellers are finding it difficult to settle below that area. Now, if that is going to be the case and if this persists, I want to be seeing price action break out the resistance line of the range we identified at the beginning of the week at exactly the $76.80 level, which we identified on the 1 hour time frame. So with this information we have here on the 4 hours time frame, you would agree with me that we are at a very crucial juncture in this market, and we need a lot of patience to wait for significant setup to join this move. Now, scaling down into the 1 hour time frame, we'll begin to see how we want to prepare ourselves for the next move. Now, this morning, while I was trying to decipher what could really happen today, I was able to identify and connect the series of higher lows here, giving us this ascending trend line to work with for today's trading session. And you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we want to feel comfortable in a buy position and look out for opportunities that will support the idea of buying that asset. Now, with the situation we have here, where price action is trading just exactly above this ascending trend line, I want to see price action break out of that resistant line of that range we identified at the beginning of the week, which is situated at the $76.80 level. So let me reiterate the idea behind capitalizing on this opportunity, especially for those of us who are joining for the first time. Now, if we have been profitable this week, that is, if you were part of this over close to 1,000 pips profit we took advantage of at the beginning of this week, then you can afford to place a buy stop order above the $76.80 area to capitalize on that uptrend move. However, if you are new with us and you yet to capitalize on any profitable positions on the USOILSPOT so far this week, then I will encourage you to exercise patience and wait for the breakout and retest of structure before you jump into a position here. So that is how we are going to be capitalizing on this one. Personally, for the fact that price still remains above that ascending trend line, I want to be looking out for an uptrend situation in this particular market. However, we cannot ignore the potentials of sellers as well, as market participants are still very unsettled as regards to the postponement of the OPEC Plus meeting, and at the same time, the increase in U.S. stockpile is a sign that there is a high supply of oil in the market at this point in time. And if that is going to be what will be the determinant factor for the market participant as we head into the weekend, definitely we might be seeing a sell-off in this market. And if we are going to be joining a bearish move to the downside, what is it that we would like to see on this chart that will make us feel comfortable selling the USOILSPOT today? Now, well, remember first of all that I did mention that price action has been within a range in the last 48 hours, as you will see here. And of course, when we have this kind of situation, we expect that the only condition that will make us consider selling is for a breakdown of the range to happen here. Now, another thing that I will also be looking at is the breakdown of that ascending trend line. Now, remember that if a breakdown of both the ascending trend line or the key level happens, we are not going to be getting too excited and jumping into a sell positions right away, as we will need to wait for some confirmations to happen before we jump into a trade here. And what I want to be looking out for is a retest of structure, or I want to see signs that buyers are finding it difficult to climb back above the ascending trend line, then giving me opportunity to sell. But if I sell around this area, I wouldn't be too comfortable in the sell positions, hence the need to be around to move stop losses accordingly to secure the sell position as price action moves in our favor. And if it continues to the downside, in fact, a breakdown of the 74 will be all I need to feel very, very comfortable in this sell position. So let's see how the market play out. Personally, if you ask me, I think price will go to the upside on this one. But if it so happens that price breaks down the ascending trend line, then we want to be considering selling opportunities in this market. But trust me, I will be with you in the comment section of both my TradingView, Telegram platforms to give you update as to how we are going to be managing these positions today. So these are my views on the US All Spot for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, after which we move on to the next asset on our watch list for today. So I see a couple of comments here. Gashi Ashafa, good morning. Jonah Aruna, good morning to you. Krishna Veni, good morning to you. I saw Gasho Ashafa. So we have two Ashafas here. Ashafa says that yesterday it goes above 76,829. And then it went to eat a stop losses. Was the mistake from me? Are you asking me what your mistake is? There is no mistake in the market. There is no right or wrong in the market. If your broker triggered you, I don't know if you set a buy stop order. If your broker triggered you, well, that is not my fault that your broker has triggered you. And even if it triggered you and it went to your stop loss, that is how the market works. At times you lose to make money. You must learn how to lose to make money. And I usually mention here that there are two ways through which you can capitalize on any potential breakout of structure. It's either you are part of our profitable journey so far. So if you are part of the profitable job so far this week and price triggers your buy position, then definitely you are only risking some of the profits you had made so far this week, so which is quite fine. If it doesn't work your way, you know that you are risking some of the profits you made so far this week. But if you are not profitable so far this week, I did mention countless of times that if you want to capitalize on breakout of structure, if this is your first position, you want to wait for the breakout of structure to happen first of all, then price action comes back, retest your structure before you want to be jumping into a position. So if I assume that you had a buy stop order there, then definitely you are profitable so far this week. So you're just risking some of the profits you had made so far this week, which is still making you on the positive side of your portfolio. And I do hope you have a well-defined risk management strategy to protect your portfolio against sudden pullback. So these are things you need to put in place as well. How many percent of your portfolios are you risking per trade? Like I usually say here in this community, every decision we make in the financial market is only an educated guess until price action hits your TP target. So you need to have a well-defined risk management strategies in that regard. So I do hope I answered your question, Gashi Ashafa. If you still have any questions, feel free to let me know in the comment section. Now, Ika's Diary says here that master the newly formed ascending trend line and $76 level shows an ascending triangle pattern. The newly formed ascending trend line and $76.80 level shows a ascending triangle pattern. Let me see what you're saying here. Ascending triangle pattern. What do you mean by that? Oh, okay. I can see what you are saying now. You are saying something like this. That is, you're using this impulsive move as a leg. Then price comes like this, right? Okay. Well, you might be right here, but personally, when I am drawing my patterns, to make sure my patterns is very, very valid, I want to see the ratio of the impulsive move and that formation of pattern as well, which makes it much more very, very convincing for me to say it's a pattern. And if I look at the impulsive move here, look at the impulse leg here right into this area, and look at how this impulsive move took out almost 50 to 60% of that impulse leg before it formed that pattern. And that for me is not really a convincing pattern for me. I'm not saying it wouldn't follow, it might not, I'm not saying it will not follow the theoretical expectation of a triangle pattern, but what I'm just simply saying here is that I usually prefer the formation of the pattern to be at least below 50% of the impulse leg before I can actually consider it to be a valid pattern on my chart. So you may be right. Well done on that one. Good for you to see that one. But personally, I'm not looking at that one to guide my decision for today, as the ascending trend line and the range between the 76.80 and the 75.90 will be all I need to capitalize on the next move. All right, Gashi Asafa, I saw your comments. You're welcome, and I hope that was very, very helpful. Please always have a well-defined risk management strategy to guide your positions going forward. So in the absence of no further questions, I do want to assume that we are all on the same page here, and in that regard, we will be moving on to the next asset on our watch list for today. So the next asset on our watch list for today is the cable market, which is the GBPUSD. And in fact, we had a little bit of volatility happen in this market yesterday. And this can be said to be connected to the positive S&P global publication that happened from the United Kingdom from yesterday. But at the way things are going right now, we saw how price action broke out of that descending trend line during yesterday's trading session. But during the Asian session, we begin to notice some pullback happen here, which for me, I was thinking maybe it might be the retracement of that impulse leg, maybe back into the trend line in anticipation of an uptrend move. But one thing we want to know here is that the pound sterling received boost from the positive PMI data released in the United Kingdom yesterday, and of course it also benefited from the closure of the US market for the Thanksgiving holiday yesterday. As we can see, there was no trading activity in the United States, and I think the pound sterling did capitalize on that absence of their counterparts in the US. And as we head into today's trading session, the pivotal question at this juncture is, will price action continue the momentum to the upside, or will the resumption of their counterparts in the US today incite a massive sell-off to the downside? Like I told you earlier, it is today is going to be peculiar with potential larger than usual trading volume. As you know, we will be having a lot of accumulated market orders due to yesterday's public holiday, which will start being executed today as soon as the US New York session opens. So we want to be very, very mindful of the way things are going in this market. Now, let's take a quick technical dissection into the structure and run through how the week started for us. So far this week, we've done fairly well on this asset, though I wouldn't say whatever we made in this market was really that significant. As you will see here, that the week started up with a bullish momentum. Remember, after we identified a range where price action was initially confined within the 1.24650 level, which happened to be the resistant line of that range, and the 1.24 465 area. And of course, I told us all how we missed out on the breakout of this resistant line at the beginning of the week, and I told us that we want to be seeing if the market will come back and retest the structure to incite an uptrend continuation here. Now, this was exactly what happened, and in fact, we were able to capitalize on this bullish move. I think we had about 90 pips move on that first position, and we added one more position here, price move of 50. Then we added one more here, price moved about 40 pips. So we had about close to 180 pips before the bearish momentum came in. We had roughly between 80 to 100 pips after being taken out of that sell position, which for me is really not that significant at all. Then during the Wednesday trading session, we also had a buy position at this point in time, which of course went into a stop loss. So we had a stop loss here on Wednesday after the bullish momentum failed to gain traction during the Wednesday's trading session, but we saw price drop down the 1.251 area, making us recoup the loss we incurred on Wednesday's trading session. And of course, we did had one more here and one more here before the bullish momentum came in, and with our stop loss well moved, we were taken out with a reasonable amount of profit on that one. So far this week, we really have not been very profitable compared to what we usually do on the GBPUSD. Now, as at this morning, I share the recent development in the market as we saw price break out of that descending trend line finally after about 2 days. Remember, we had this descending trend line, which we said we will be using to guide our trading decision since for the last 2 days. And if price remains below the descending trend line, we want to be looking out for opportunities to sell. But if price breaks out, then we want to be looking out for buying opportunities here. And we saw price breakout yesterday. Personally, I didn't take advantage of this opportunity. That is why you really didn't see me give any updates as regards to what happened here on my public platforms. And one thing I was looking at yesterday is that because of the low liquidity in the market, it could result in some volatility spikes, which I was very wary of. So I decided to stay clear of this particular market yesterday. But during the Asian session, we saw price retrace back into structure, and I did mention this morning that we want to be buying at the breakout of the 1.254. And for those of you who took advantage of the breakout this morning, well done to you. So let's see, you want to be moving your stop losses right now. Let's move your stop losses to the entry point right now. We are not considering this move as profit at all at this point in time. So we have about 20 pips running in profit on the GBPUSD at this point. So let's see if the market will go on to break out of the structure. Now, for those of us who had capitalized on that buy opportunity, we can now afford to leverage on some of the profit we had made and place a buy stop order above the 1.256, and let's ride that momentum. And if it doesn't work, we know that we are only risking some of the profit we made so far. So I don't know if Gasho Asafar is still around. So this is simply what I was saying earlier. So if you are profitable, you can afford to have a buy stop orders, knowing that you are only risking some of the profit you had made. But if this is your first position here, you want to wait for a breakout to happen, then be patient enough to wait for a retest of structure before you jump into the position. And always remember that you want to be having a well-defined risk management strategy, which must be consistent with all positions you are taking from your portfolio. So that is how we are going to be managing GBPUSD today. Things are still looking very bullish at this point in time. We continue to look out for more buying opportunities. And in fact, if price action does take out all the sell position along the 1.256 area, I'm of the opinion that we are likely going to be seeing a massive move to the upside. So let's be on standby to capitalize on that move. However, in as much as we're looking out for buying opportunities here, we cannot ignore the potentials that sellers could also come in. Now, for me to sell the GBPUSD for today, I would rather want to see price action drop back below this descending trend line for me to consider selling at all at this point. However, that doesn't negate the idea of selling even before the breakdown happen if we can see very significant structures and patterns like lower lows and lower highs to emphasize that sellers are gradually gaining momentum, especially as we head into the New York session. But trust me, I will be with you in the comment section of both my Trading View and Telegram platforms to give you updates as at when due. But as it is right now, I want to maintain a bullish momentum in this particular market. So this is my simple view here on the GBPUSD for today. So let's mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So I don't know if you have any questions. If you do, feel free to let me know in the comment section, as I will be taking the next 10 to 15 seconds off to see if there are any questions, while you can also use that time to mark out these levels on your chart. All right. So in the absence of no questions, I want to assume that we are all on the same page and that all I've said is well clear. And I do hope you marked out these levels on your chart, as you will be needing them as reference points to guide your independent trading decisions for today. So with that being said here, we will be moving on to the final assets on our watch list for today. If you still have questions, feel free to drop them in the comment section. So the next asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. And in fact, in the last 24 to 36 hours, price action has been in a limbo, and we all know why that is, of course, due to the low liquidity. The absence of market activities during the New York session yesterday has also resulted in this consolidation phase we are noticing in this particular market, which is not coming to us as a surprise. Now, our yesterday's sell position is still struggling at this point, as you will see. Remember, we sold around this area. We had about 27 pips running on this one, and we also added one more position, had the breakdown of the $1,993.50 level, which you can see price is just right back at that entry point. And for those of you who are with me on both my Trading View and Telegram platform, I told you to move all your stop losses and secure this current position, as we are really in a very delicate situation right now. As you will see, price action sellers have been struggling to break down the 1,900 area since the early hours of yesterday's trading session. And for me, this is a sign that buyers may likely be taking over this market. And if you look at the peculiarity of the 1,900 level in the past, if you go to your higher time frame, you can check it out right now. If you go to your higher time frame, and in fact, if you have been with us in this session, you will remember how we were buying around the 1,900 in the last 6 to 7 months. As soon as price gets into that area, we saw our sellers were finding it difficult to break through that area. And because of the memory for buying power around this area, I'm of the opinion that if you have a sell position still running right now, please, is either you get out of it or move your stop losses and limit the losses that you may have on this if price action reverses and moves to the upside. Now, despite all this information here, it is also important that we also know what fundamental factors or economic situations that are really resulting into the emotional decisions that is going on in the market right now. Now, one thing I would also like to state here is that the US dollar is very weak at this point in time. And though we have some easing inflationary pressures, especially after the release of the more hawkish FOMC minutes, and of course the upbeat US labor market and consumer sentiment data, which suggested that interest rate could stay higher for longer, and of course increase the dichotomy amidst market participants as to there is likely going to be one more interest rate hike this year and there is not going to be one. So at this point in time, we are really in a limbo, and this idea here could be limiting the potential of gold's movement to the upside. Now, further amplifying this scenario is the recent uptick in the US Treasury bond yields, as we saw it recover a little bit in the last 12 to 18 hours if you check your chart on that one. And this is for me a sign that we really need to be very, very careful. And as we look forward to the high impactful event from the US economic today, remember I did mention earlier that we are looking forward to the S&P global publication for both the manufacturing and services sector of the United States. And this from what we saw economists projecting data that is below the previous month. So there is a sign that there has been a little bit of contraction in those sectors. So we still look forward to see what the actual data will be. But one thing for sure here is that depending on how price action plays out here will give us clues and insight into how the big players will be anticipating this event. And what we want to be doing here is to look out for structures and patterns that will help us position ourselves strategically for the next move. And one thing I would like to say here today is that the next move on this asset is going to be a very massive one, and we do want to be on standby to capitalize on that move. Now, let's run through the current conditions in the market. Let's see how we started the week, especially for those of us who missed out on the earlier editions of the Forex Morning Mastery. Now, at the beginning of the week, we saw the situation here where price action was initially confined within a range between the 1,985 level and the $1,973.50 level to give us an insight into the level of indecision at the beginning of the week. Now, you know how we do it in this community. When we have a range like this, we want to exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, in addition to that range, we did talk about the ascending trend line, which captured the series of higher lows since last week Wednesday. And of course, we saw how the range was sitting just right above this ascending trend line. And personally, we talked about how we want to be looking out for buying opportunities in this case scenario. However, a couple of hours into the New York session, we saw how price did break down that ascending trend line, giving us signs that we might likely be seeing a sell-off in this market at the beginning of the week. Now, as a result of that, we positioned ourselves below the support line of that range at the $1,973.50 level, capitalized on that bearish move, and in fact, we had about 80 pips move before the bullish momentum came in. And as usual, we do move our stop losses accordingly as soon as price moves very well in our favor, and we did that. We got taken out with a moderate size of profit, or at a worst case scenario break even. And never forget that we had our key level at the 1,980, which we said if price at any point in time breaks out of this 1,980, we want to be capitalizing on an uptrend. And of course, I did give updates on this one. And for those of us who were live during the XAUUSD live window, we had the opportunity of joining this move as we rolled it all the way up into the $2,007 area. And of course, we had multiple entries to maximize the potential of that move. Then again, on Wednesday's trading session, we begin to notice the emergence of a reversal pattern after buyers were finding it difficult to break through the $2,007.50 level. We saw a high there, then we saw a higher low, giving us signs that buyers are losing the momentum. And when we take a step further to look at it from an holistic perspective, we begin to notice the appearance of a reversal pattern in the form of a double top structure. And with our neckline situated around the 1,996 level, we capitalized on a sell position. Price did break down of the structure. And during our live session yesterday, we talked about how price has come back to retest that level, which triggered our sell positions here. Now, since yesterday's trading session, we have seen how the bearish expectation here is limited, as sellers have been finding it difficult to break through the 1,900 area. Now, for me, this reversal pattern may be negated if sellers are unable to break down the 1,009, and in fact, this 1,900 level could become a platform that will incite another wave of bullish momentum. And I did mention earlier that you can go ahead and check your higher time frame. You will see how the 1,900 area has a strong memory for buying power in this particular market. And if sellers are unable to break down the structure, I'm of the opinion that we are going to be seeing a bullish move. Now, how do we intend to capitalize on any potential opportunities today? Now, please remember, I did mention that for those who still have a sell position, please move your stop loss, protect your position, or get out of this trade right now, as the sell momentum is not looking convincing at this point in time. Now, to position ourselves for the next move for today, how do we going to do that? How are we going to do that? So right now, in the last 36 hours now, price action has been confined within the $1,996 level and the 1,900 area, giving us an indecisive phase going on at this point in time. Now, coupled with this range we've identified here is a descending trend line after connecting the series of lower highs since Tuesday's trading session. And in fact, I have a couple of descending trend lines here, where I have the temporary one here and the major one right here. Now, if sellers find it difficult to break through the 1,900, well, I'm of the opinion that this could be a platform that will lead into price breaking out of those descending trend line to incite the second wave of bullish momentum for this week. Now, how do we intend to capitalize on that one? Well, we do know how we do it. Whenever we have a flat channel like this, like a range, we want to see price either break out of the resistant line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And because of the inability of sellers to break down the 1,009 in the last 36 hours, I'm of the opinion that if price breaks out of the resistant line at the 1,996 level, price would also have taken out those bearish trend line, which would give us a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt, giving us a beautiful opportunity to join a bullish move. And like I usually mention in this community, there are two ways to which you can capitalize on breakout of structures in this community. The first one is for those of us who have been profitable so far this week, we can afford to leverage on the profit we had made so far this week by testing waters around the $1,996 area by placing a buy stop order above that structure. And if it doesn't work out, we know that we are only risking some of the profit we had made so far this week. Now, placing a buy stop order here, have your stop loss somewhere way below the $1,993.50 level, which will be giving us about 40 to 50 pips thereabouts. And let's see how this move is going to play out today. However, if you are new with us and probably this is your first position, you really have not made any profit on the XAUUSD so far this week, then you want to exercise patience and wait for a retest of structure, retest of either the 1,996 or the descending trend line that was broken to now capitalize on that uptrend move. And in fact, we have multiple levels here that we will be using to capitalize on the uptrend continuation. So we have that psychological mark at the $2,000 mark. We also have the $2,007.50 level, and finally the $2,010 area where we want to be maximizing this bullish move if price action ever breaks out or even get to those levels here. So that is how I'm going to be looking out to capitalize on the next move. And like I said earlier, whichever direction the breakout happens today is going to be very, very massive. And of course, we want to be on standby to capitalize on that move. So that is how we are going to be managing a bullish expectations on this particular market. However, you know how we do it in this community, in as much as we're looking out for this buying opportunity, which is looking very, very visible based on the fundamental factors we've looked at, and of course the technical perspective here. We cannot ignore the potentials that sellers could still push price to the downside. Now, if that is going to be the case, remember, we should be expecting a lot of backlog of market orders due to the public holiday yesterday, and as soon as the New York session opens, this backlog of market orders will be pushed into the market, and this would incite a lot of volatility in the market. Now, if price on the other run drops below the 1,900 area, then we want to start considering selling. And for me, I will say here that if price breaks down the 1,900, since price is still below this descending trend line, it's looking more sellish, right? But still considering the fact that the 1,900 area has been has a strong memory for buying power. So personally, I will be suggesting that being conscious may look very reasonable, waiting for a retest of structure before we jump into any sell positions here. But if you are comfortably profitable so far this week, you can afford to risk some of your profit, maybe with a 1% risk on that one. Sorry, I'm not supposed to be saying I'm not giving a signal service. I'm not supposed to be giving you a risk appetite ratio. But one thing I would like to say here is that if you are profitable so far this week, you can afford to leverage some of the profits you had made around in this week to capitalize on that move to the downside. So let's see how the market will play out. So basically, our center of focus for today's trading session is between the 1,996 level and the 1,900 area, where depending on the breakout will determine where price action is likely going to be closing for this week. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you update as to how we are going to be managing our position. And of course, the XAUUSD live window will be on, of course, during the New York session, so you can be part of that session to see how we monitor real-time price action on the XAUUSD. The link to the XAUUSD live window is right in the comment section, so you do want to click on it. I placed it right at the top, pinned it at the top of the comment section. Click on it, click on the notify me button so you can get notified as soon as we come on live for the XAUUSD real-time price action monitoring. So this is my view here on the XAUUSD for today. If you have any questions, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds off to see if there are any questions, while you also mark out these levels on your charts, as you will be needing them as a reference point to guide your independent trading decisions. And please, if you have found this content helpful and useful in making your independent trading decisions for today, kindly support this project by giving the video a thumbs up. Your likes are very valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial. Let's grow this community, and thank you very much as you do so. So with that being said, let's see if there are any questions, then we can move on to round off for today's trading session. So I can see a couple of comments here. First of all, Eric Mudavadi, good morning to you. I'm glad to have you around with us this morning. Trust you're doing very well. So you said here that for gold, the breakdown is at 1,900 or 1,000. Oh, all right. Thank you very much for that. That's a typographical error. Thank you very much for that, Mudavadi. Okay, so 1,990. Thank you very much. Sorry about that. Okay. Thank you very much. Okay. So it's 1,990. I believe the level shared in your chat should be. Thank you very much on that one. So the next one here is Hiker's Diary. Says that I'm always confused with identifying of retest after a breakout. Could you please explain that by showing an example on the chart? All right. Well, we've said this countless of times as well, and I'm very sure you are part of our previous sessions where we discussed about this, but it's okay. I will take you through it one more time on what we actually look out for whenever we are looking for breakout and retest. Now, the most important thing we do want to understand about breakout and retest of structure is simply that we need that retest of structure to validate that truly price action will be going in that particular direction. So before we talk about what it looks like on the chart, let's understand the psychology behind looking out for breakout and retest of structure. So when we say we are looking out for retest of structure, what we are simply saying from a logical perspective is that we really want to confirm that truly price action wants to be going in the direction of the breakout. Now, let's say we are looking out for buying opportunity in, let's say in this case scenario now, and price does break out of the structure. So we want to truly know that this is not a false breakout, but true breakout here. Now, the only way we can know that this is a true breakout is that price coming back to retest the structure. And if price comes into this area, we want to see signs that sellers are finding it difficult to drop down below the descending trend line. Now, we want to see signs that price is not going down here, that price is not dropping down. If price is dropping down, then it shows us that sellers are still very, very strong in this particular market. So we want to see signs that sellers are finding it difficult to break down into their territory, and this usually reflects on the chart as continue buying pressure. That is, price drops, buyers take it back up, price drop, buyers take it back up. Every time sellers are trying to drop into that area. And when you begin to notice this, especially on your 15 minutes time frame, then you know that buyers are gaining momentum and sellers are struggling to maintain the momentum. And definitely this will give us a sign that truly that direction of breakout is where price wants to be going to. Now, let us look at what happened here in the past. Let's see in the last 12 to 14 hours. You will see here, look at what happened here. Sellers were trying to drop below the 1,990 area, but they were finding it difficult to drop below that area. look at what happened here again. Around the $1,993.50 level, we saw sellers were trying to drop down, but they were finding it difficult to drop down. Look at, they're finding it difficult to drop down at every point in time, which is a sign that buyers are gradually gaining momentum behind the scenes. So this is what we are simply looking at. So I think the terminology of breakout retest used to clog the understanding of what truly it means. But I would like to let you know, to take it from another perspective, what is the essence of a breakout and retest of structure? The essence is simply that we want to truly see that price action will be going in the direction of the breakout, which usually reflects on the chart as sellers struggling to drop down of the breakout, the level that was broken out of. So that is basically how I can explain this to you. And you can as well read some literatures on breakout and retest of structures. They are quite across the internet, but I'm always very wary of all these literatures we see out there. But it's okay. I think with this one I said here, you will be finding it very easy to be able to relate with. If you still have questions, feel free to let me know in the comment section. So that is my view here on this explanation. So let me know if you have any questions. So in the absence of while I wait for your questions, if you still have any, I'll round off on this one. So today we were able to attend to three major assets today, which we have been monitoring since the beginning of the week, which are the GBPUSD, the XAUUSD, and of course the USOILSPOT. And in fact, we've done fairly well this week. We've done fairly well. The US all did very well. We had over 1,000 pips on the US all. The GBPUSD, we struggled. We have something around 100 pips thereabout on that one, while on the XAUUSD we've done fairly well too as well, and we look forward to some significant surge in price action today, and I do hope we will be on standby to capitalize on that move. Now remember, always mark out these levels on your chart, as they are going to be very, very useful for us to guide our independent trading decisions during the trading sessions we are going for today. And always remember to exercise patience and allow your structures to mature before you jump into any positions here. And very, very important as well is ensure you have a well-defined risk management strategy, which must be consistent with all positions you take from your portfolio. Remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So it's on this note, I wish us all the best of luck. Okay, you're welcome, Ika's Diary. Glad that you found that useful this time. So I hope you will not ask me that question again next time, Hiker's Diary. So with that being said here, I would like to call it a day. So today is the last trading day of the week, and of course tomorrow I will begin to churn out my ideas ahead of the new week. So if you have not subscribed to the channel, please do, so that you can get notified as soon as I share my latest ideas on how we are going to be preparing for the next week. And see you all in the comment section of both my TradingView and Telegram platform, and of course during the XAUUSD live window as we continue to monitor price action. And for those of you who have joined us for the first time today, I do hope you are able to gain one or two things from what we discussed today. But trust me, try to be part of the subsequent editions, as the more time you spend with us in this community, the better you will become in understanding the analytical approach, and eventually be able to use the information you gather here to make your own independent trading decisions. So look forward to seeing you all again next week, 8:05 a.m. UTC, 9:05 a.m. West African time, as we come here again to start the new week on a positive note. Do have a wonderful evening, everyone. Trade smart, trade consciously. Bye-bye.